Hi everybody, this is Osprey from MyChartCoach.com. And in this video, we're going to take a look at the indices. We're going to take a look at some inverse ETFs, and then we're going to look at the volatility. Okay, so first off, we're going to take a look at SPY. Okay, so this is the S&P 500 ETF SPY, and so yeah, so I posted a video last night, and I want to show you the follow-up today. So yeah, it closed up today, fractionally. It was up large on the, had a nice gain going on the day, and then it pulled back and sold off into the close. And as you can see today, a black candle formed. A black candle forms when the share price is up on the day but closes below the open. Okay, so it's a signal that the bears were actually in control into the close. And so it's a red flag that you have two red candles in a row, and then it's still below the 50-day simple moving average. Notice how it has a hard time crossing this green line. On all of my charts, the green line is the 50-day simple moving average, and it's currently at 272.27. Now, I know that SPY is trading at 271.30 right now, and after hours trading. Actually, now it's down to 271.25. But, I mean, if you look at the chart over here, this small chart, you can see at 271, it's still at the lower range of the day. So it was way up here, pushing 273. The high of the day was 273.05. At 271, you're still near the low of the day. VWAP is at 271.05, so it is above that level, but this is after hours trading. And so the thing is that it's still, even at 271, I don't think it's much to get excited about, because it's still below this red descending resistance line. So notice the the candles have been failing to break above this red line. When you see the chart set up like this, and you see a descending resistance pattern where the upper wicks keep failing to, the real candle body keeps failing to close above resistance, and you keep seeing upper wicks off of that level, that's a signal that the algos, the algorithmic trading programs, are set to sell at that level. Right now, they're set to sell at the middle Bollinger Band. That's the dotted purple line. It's currently at 272.70. Okay, that's also the 20-day simple moving average. They're also selling it at the 50-day simple moving average at 272.27. So once you see candles forming above 272.70 and there's a close above that level, okay, so the real candle body, this is the real candle body, not the wicks, but the real candle body has to close above, and then that would signal the possible start of the uptrend. And what it will signal to you is that they flipped the switch on the program. Okay, so right now the program's to sell. Okay, they're selling the spikes. Okay, they're driving it down into the close. It looks like they're unwinding, these positions here. The people that made all the money up here, they're trying to slowly unwind that, lock in the gains before, not let it drop too hard. That's what it looks like to me. And so the bottom line is, if they're looking to take this to the next level, if you're thinking S&P 500 is going to break out and it's going to run back up to 286 and test those re-highs, well, it's not going to do it unless it closes above the middle Bollinger Band and the 50-day simple moving average. It's really, really simple right now in the charts. All you have to do is watch these two levels below the 20-day and 30-day or 50-day simple moving average for SPY. That signals downside risk. That signals to either be on the sidelines or short. Okay, you do not want to be long with this type of pattern. And once it gets above, that's when you can jump long. Right now, there's more risk to the downside than there is to the upside. You'd be better off sitting in dry powder waiting for this to be clear, or to me right now, that this is looking like it could drop further. Right now, it's holding that key support line. See that lime line right there? That's 270.21. That's EMA 8. Okay, so it's been holding that. Once you see a close below that level, watch out below. You could see a drop all the way down to 264.44. Remember, the low down here has not been retested. That this is looking more like a bear flag than it is looking like a breakout. You have the bounce, and then you have the resistance. I know that would be a huge flag, but you get the point. It dropped down, it's bouncing up, it's hitting resistance here, and it's failing to break. You've got the horizontal resistance. Okay, so now let's take a look at the 15-minute chart. Okay, so as you could see here, when all these indices were running hard, they had this exact same pattern. Look over on the left here, the 13th, 14th, and 15th, and 16th. Notice how it's a very tight trading range, riding super strong, straight up. This is 2017, right? right? It's just everything's just going straight up, super strong. Well, this chart to these candles to the left or the right, this is 2018. Okay, this is what we have now: volatility, ups and downs. Okay, this is the new market. This is the old market. Okay, I think we're going to get more of this kind of action. And right now, this is a downtrend. Okay, so S&P 500 here, the SPY, the spider here, it's making lower highs. Okay, so you have a high here, and here's a lower high, and at the same time, it's making lower lows. It keeps making lower lows. Okay, so where's the next lower low? 269. Right, that's the bottom of this channel. Look at the descending support line, and what's happening right now? It's hitting this red line, which is the 200 simple moving average, currently at 270.28, and it's just holding on to that line for dear life. Look at how there's 5 candles were just clinging to that. Look at that lower wick. It was trying so hard to close below, but the algorithmic trading programs would not let it happen because the computers are in control. The machines are in control now. This is you know, it's out of control. You know, the stock market is out of the control of the humans, and it's this program trading that's getting that's creating this crazy action that we're having. And so right now, if you get a drop below that 200 simple moving average, that's going to be your downside risk signal. And then you're looking at the 300 simple moving average down here at 268. That would be the next major or the 300-day simple moving average at 268, the blue line. That would be the next major support level. Okay, now let's talk about the big volume spike. So the reason why SPY is up after hours, and this is what everybody's talking about, is this volume spike right here. Okay, so everybody's really excited about this volume spike. Oh, they're getting fired up. They're like, yes, this must be the sign. This is the sign right here, the giant volume spike, end of day, that people are loading. So why? Tell me, on a Thursday, heading into a Friday, before a weekend, but you think that people are going to all of a sudden, after this big downtrend here, are going to load heavy end of day on a Thursday? I mean, I just find that hard to believe with the bearish pattern right now, with SPY being in a downtrend here. All of a sudden, they're going to get super bullish end of day, and they're going to push it through all the resistance tomorrow. I think anybody that was really smart, that had that kind of money, would be waiting to load until after it got above resistance, and knowing that the coast is clear. It's too much uncertainty right now to be placing a big bet on the long side. Okay, so what is this volume spike? Well, this is a little pattern that I found, and I'm not claiming that this is going to be 100% accurate, but I just find this interesting, and maybe you'll find this interesting as well. Okay, so notice at end of day here, there's a green volume spike on the 13th, right? Okay, what happens on the 14th? It closes higher, right? Okay, on the 14th, end of day, green volume spike. What happens on the 15th? It closes higher. Okay, on the 15th, green volume spike, end of day. What happens? It closes higher. Okay, so you've got the higher close over here, slightly higher, right? And then what happens here on this day? You have a red candle, end of day, the red volume bar, end of day, and what happens? It closes lower. And then you've got the green giant volume bar, end of day, and then what happens? It closes higher. And so yesterday there was a red one, end of day, and I would call this flat. You know, I would say this was a losing day for the bulls because it started so strong and it ran all the way up to 272 and then was driven all the way back down. This is not what you want to see if you're a bull. And so I would say that the bears won that. And now today you have a giant red volume spike. So if this pattern continues, you know, more than likely there's going to be a down day tomorrow, and with the size of this volume spike, it might be a big down day. You know, that might be they're really trying to like lock them in before they drop it lower. Now, I'm not saying that's going to happen 100%. I'm just saying this is an interesting pattern, and if the pattern continues, the markets will be under pressure tomorrow. Just looking at the volume pattern, I'm just trying to throw out a little bit of contrarian viewpoint on everybody being so bullish right now on the SPY after hours. Now it's down to 27, you know, 271.15. I feel like people were jumping on because of the volume, but they're not really analyzing the situation clearly. And I think what may be going on is this right here: dark pools. Okay, so and once again, I'm not claiming that I'm 100% correct on this. I'm just throwing this out as a theory. What are dark pools? Okay, and then so having an order filled according to MBBO, that's what happens when you have, that's the national best bid and offer regulation. So if you'll have that on the dark pool, and that's why people are going on the dark pools. And it's especially important to institutional traders engaged in the trading of large blocks of securities. The pricing of securities offered by a public exchange can become compromised when the large order hits the open market. Through processing the transaction in private, the institutional trader is able to realize a desirable price for the trade without worrying about having to pay a premium to the market because they didn't reveal their cards and had to pay more. For instance, if investment bank ABC wanted to buy 1 million shares of company XYZ to diversify their equities portfolio, the purchase would likely have an impact upon the current market price of XYZ. However, if the transaction is conducted in a dark pool, dun dun dun, out of the trading public's view, then the trade is executed without creating any abnormal volatility in the marketplace. Okay, and when do you get to see where all these dark pools are executed? End of day. They show up end of day, everybody. This is dark pools. These are the, in my opinion, the volume spikes end of day are the realized transactions that happened earlier in the day on people that didn't want to show their cards. Okay, and so that's my theory on that, is you're looking at dark pools and they show up after hours. You'll see large blocks come through after hours, and those are the dark pools that are printing, okay, that traded earlier in the trading day by people that didn't want to show their cards. It's big players that don't want little players like the people watching this video right now. They don't want you to see what they're doing, so they're hiding their actions, okay, and so because we follow the big players through the volume bars. That's how like the big players can make their moves, but they can't hide away from the volume. And so that's where they reveal their cards, and we get to get a glimpse on what their actions might be, what direction they're looking that the markets are going to head. And so everybody does a lot of following of the volume. Okay, so now let's look at the pattern. So now I showed you the pattern, I showed you the setup. Now watch how it's on every single one of these charts. Okay, and so look at, and you couldn't, that's why I'm saying this is computer programs too, because people couldn't create such uniform patterns. Okay, so look at the Dow Jones Industrial Average. Same setup here. It topped out. This is the daily chart. It came down. It hit that 50-day simple moving average. Failed to turn it into support. Failed to get above the dotted purple line, which is always the middle Bollinger Band. Failed to turn that into support, and it pulled back. Notice how it has a descending resistance line. Notice how all the candles are failing to hit it. It could keep going like this all the way down to freaking 2360. I mean, if anybody's charted for an extended period of time, you know how strong a descending resistance pattern can be. Okay, and what's the problem now? Well, the problem now is the candles are back, struggling with EMAs 4, 8, and 13. And so what happens when candles are below EMAs 4 and 8? This is the pattern over here. The candles go lower. What happens when the candles are above EMAs 4 and 8? It's the pattern over here on the left. Stocks go higher. Okay, so right now they're struggling with going lower. It closed below yesterday, those levels, and today it was slightly above. But those upper wicks are showing you that they're selling it off, that they're running it up, and then they're locking in gains and pulling it out. I think they're unwinding their positions before they pull it back. And so a lot of people loaded heavy. Look at the big volume down here. There's heavy volume off that bounce, and so they're slowly walking it down. Now this could reverse in a heartbeat. And we are nimble and fluid like water. And as soon as this breaks above the 50-day simple moving average in the middle Bollinger Band, I'll be, one wild bull again. I'll be like, yes, the bull trade is on. We're ready to go. It's back above the middle Bollinger Band. As long as it holds, let's get that uptrend going. But that is not the scenario right now. The scenario right now is caution. Okay, the scenario right now is be very, very careful. The scenario right now is the bears are currently in control. Okay, so if it fails to break this red line, if it fails to get above EMA 13 at 24996, then you're talking about a drop down to the 100-day simple moving average at 24299. Now look at the Dow Jones Industrial Average 15-minute chart. Okay, so each candle is 15 minutes of trading, and notice that just like the SPY over there, it had the very strong uptrend. Okay, when it was running hard, and then now look at the downtrend. You know, it's all it big swings, right? And so it hits the top of the channel, the bottom of the channel, the top of the channel, and now it's winding here. And so what you have is you have a descending triangle pattern, and you have the horizontal support level, which is lined up with that 200 simple moving average at 24940. So if you see the Dow Jones Industrial Average tomorrow drop before 24940 and it turns into resistance, it could drop down to 248, which was the low close down here on this candle, yesterday's close, and then that's lining up with the 300 simple moving average at 24780. You know, it looks like that's where it's heading. Notice the descending resistance line, right? It's failing to break that level. Once it breaks above and gets above the 100 simple moving average and turns it into support, notice how it failed to get above that level, you know, turn that level into support the last 2 days. Today I posted real-time alerts, and I did, you know, share it with StockTwits, some of what we do in the chat. This is what we do all day long in the chat, and I posted some of those charts and StockTwits to show everybody how we can call the timings pretty good using the charts. And I nailed this top right here in real time. You can go back and look at StockTwits and see the play-by-play. But you know, I called out this top as it was happening, and it did turn out to be the high of day. And so people that caught that alert and you know, took some action and bought some puts, you know, they made some money. So congrats, thank you for following. Okay, so same pattern here. Look at the volume bars. Okay, green volume bar, it's up. Green volume bar, it's up. Right? Red volume bar, you got it down. Okay, green volume bar, it's up. Red volume bar, okay. I would call this, even though it was up on the day, I still think the bulls lost because it ran so hard and then sold off. That was a demoralizing pullback, right? I mean, I feel like that 164 points. There was a couple of stocks that were holding it up that had good earnings, but a lot of them were under pressure. Okay, so a lot of the stocks were under pressure. So in my opinion, the big red volume bar is actually a red flag. It's not a reason to get bullish. It's a reason to get cautious. Okay, that's the pattern right now that I'm seeing, and like I said, I could be wrong. Okay, let's look at the Nasdaq 15-minute chart. It's ticker symbol COMPQ, and as you can see, it held up better than the other ticker symbols. It's been in this sideways channel here, and it's currently hitting the bottom of the channel, and you can see the multiple bottoms. So you have a bottom, a bottom, a bottom, and then today it's right back at that bottom. We're talking, you know, 4 times it's been at this level. Once it finally, when you have a multiple bottom like this, once it finally breaks, it could really get cooking to the downside because it's been tested so many times. You know, it's the same thing with the upside. You know, once you break a big, a resistance level has been tested multiple times to the upside, you usually get a nice pop. Well, the inverse of that is if a support level is holding, and then it finally breaks, sometimes you can get a strong move to the downside. And right now, the big support level is the 200 simple moving average at 7175. That's the big level to hold. If that breaks, you're talking about a drop down to 7100 and the 300 simple moving average. Now check out the color today. I mean, it's red. That was a very bad pullback for Nasdaq. You have Amazon, you have Netflix, you have Nvidia, you have all these top dogs. Apple made a huge recovery. All these stocks that are leading the markets higher this entire time, the whole of 2017. What was leading the way? Technology. And so you have multiple stocks that are making all-time highs that are also making double tops at the exact same time. And then now you have the Nasdaq that closed red today, and it's failing to break out to new highs, and it's attempting to bust lower. In my opinion, I feel like if Nasdaq crashes, if Nasdaq's pulling back, it's going to bring the whole markets down with it. The FANG stocks need to be pushing higher, and so this is a little bit of bearish divergence here when you have the Dow Jones Industrial up, but Nasdaq, who is leading the way, is red after it had a nice green day. I mean, it was way up here at 72.80, and it lost 70 points into the close. That was a brutal pullback once again. That's 2 days in a row where you have a brutal pullback after what we call a bull trap. It's a bull trap when they run it up and then they drop the floor on you. Look how they walked it up, and then bam, dropped it out. Same thing yesterday. Walk it up, bam, dropped it out hard. That's been the pattern, and that's a symbol that we're hitting a top. That we're hitting major resistance. And if you look here at the daily chart for COMPQ, you can see here how what's going on. It's actually above the middle Bollinger Band, and that's why I was saying it's stronger than the other indices. It has, it's trying to get a new uptrend going. It still closed above the middle Bollinger Band at 7195. That's the key level to hold. If you see it above 7200, then it still has the possibility of starting a new uptrend. Notice how it's above the descending resistance line. It's trying to turn that level into support, okay, which is a bullish, divergence from the other plays. Right, so that's a bullish sign. But this cooling down and with all these red candles, that's a red flag. To take caution, because if this breaks down, it could bring the market down with it. Now you can see here we've got the 50-day simple moving average at 71.31. That's the big support level to hold if the middle Bollinger Band breaks. If the 50-day simple moving average happened to break at 71.31, that's when you can see the big drop back down to that 6,900 level, testing that 100-day simple moving average that was tested on the last bounce. And so this is either going to start a new uptrend here and then run back up to 7,500 and test new highs with Amazon and Netflix and all these stocks at all-time highs, and it's going to make a huge run, a giant 300-point run, or is it going to pull back and retest the recent lows? I mean, it's right at the 50-yard line. I mean, place your bets. What do you think? Is it 7,500 or 6,900? Which one's going to get hit first? I mean, I'm leaning more towards 6,900, and I guess I'm feeling a little bearish after looking at all these other charts, and so that's where I'm leaning towards. But yeah, tell me what you think, 7,500 or 6,900. Okay, IWM. Okay, so check out how it's below the red descending resistant line. This is the Russell 2000, okay? So this is the Russell 2000. It closed red today too, and the small caps had been very strong as well. So to see the small caps and to see the technology stocks under pressure, that's not what everybody, that's not what the markets want to see right now. Okay, so you have a lot of indecision here. Notice the descending volume pattern, declining volume pattern. The volume bars are getting smaller and smaller. So there's a volume spike coming, and it's either going to be a green volume spike that's going to push through resistance, which you have to get above the middle Bollinger Band, and then the 50-day simple moving average at 153.76. That's the big level. Notice how all these wicks failed to get above that level. Why have they failed to get above it? Because the program right now is set to sell. Okay, it's set to sell the 50-day simple moving average. Don't let it go above. Every time it gets above, sell it. Every time it gets above, sell it. That's the program. Once you see it close above, then they flipped a switch on the program to buy. Okay, it's that simple. We're just following the program. This is the poor man's algorithm. Okay, and so if it holds the 100-day simple moving average at 151, then it's still it's in a tight channel. Check out how the 5 real candle bodies are within this very tight trading range between 153 and 152. And so if you get a break above 153.50, that's going to be a signal. Okay, yeah, it's heating up and it wants to head higher. If you see it drop below 152 and the real candle body closes below that level, that's going to be downside risk. Major downside risk if it gets down in the 151s, okay? Because then it could really get going to the downside, and you could see it drop down to 145. That's why I'm putting all these videos out, because after the big shock of the last drop, I'd put out there was multiple times where the markets looked like they were going to have a pullback and they didn't, and I put out videos to try to warn people, and then each time it was kind of like crying wolf, and then the last time I felt like I didn't put out enough of a warning, and then the big pullback happened, and it was disastrous for a lot of people. So I'm trying to help everyone here and protect them from future losses. That's all I'm trying to do here, just to show you that you need to be careful, and just to show you that you can use the charts to not only track the movement of your individual stocks that you're trading, but you can track the indices, and then you can figure out maybe what's going to happen to your individual stocks by how the entire indice is trading. And so if you look here, this made the double top action. Okay, I posted that in the video last night. It had the double top, okay, right here, and then it got a little bit higher than that, and then it pulled down, and look, you have a falling wedge pattern, and it did break, it did break below horizontal support from yesterday, and so that closed below, signals more downside risk, and now it's hitting the next support line, which was the low close from the 20th. And so if it breaks below this level, this 152 level, that's going to signal real downside risk. The 200 simple moving average is at 150. That's a really big level to hold. That looks like where it's headed. You know, you'll know whether or not this is going to bounce by whether or not that holds. If it drops below, then you're looking at a drop down to 150 to test the 300. This is not going to be bullish again until it's way up here above. Notice the descending resistance line. Okay, it has to break above that, and that's lined up with the 50 and 100 simple moving averages. It has to be above 153, you know, into that 153.50 range to head higher. Okay, so the indices are under attack. All right, they're looking very bearish to me right now, and it looks like there could be some downside risk. And so I'm looking at the bear ETFs, and they do trade options. And so yeah, it's just a way to get some you know, to make some money while the markets drop, right? That's what this is all about, to try to make some money. And so SPXS here is trying to hold on to this uptrend. Okay, so it got above the middle Bollinger Band, ran on the big drop in the markets, and then now it's been holding this middle Bollinger Band level. As long as the middle Bollinger Band, the 20-day simple moving average at 27.83 holds, the dotted purple line, it's in play. Notice how it has an open red candle. Today's close was above the open, even though it was down on the day. That's a bullish signal. That's a signal the bulls were actually strong, even though it's a red candle. And so it's the inverse of the black candle. Okay, it's a positive thing to see. There was a big volume spike. That's a signal they were loading into the close. Here, let's look at we'll look at the accumulation distribution, and there might be a little spike up, even though it was down on the day. And that's always what the bulls want to see. And yeah, see down here, look at accumulation distribution. Check out the big spike up, right? Spike up, big volume spike, but it was down on the day. What is that called? Bullish divergence. All right, people are loading even though it's down on the day. Okay, so people are placing their bets that the market's going to drop. All right, it's happening. There was a big load today. Okay, and so it's all about the 50-day simple moving average at 28.17. Okay, closed right at that level, above that level, and it should get cooking. Okay, so look for a close above that to tell you it's heading higher, and then we'll be looking for a run up to 31 to test that 100-day simple moving average. Okay, if you look at SDS here, this is the ultra short S&P 500. It has the exact same pattern. All right, so this is just another vehicle to short the S&P 500, and you can see here it got its same pattern above the middle Bollinger Band, ran to the 100. It's holding the middle Bollinger Band. You've got the nice open red candle. You know, you've got some accumulation. You know, people are acquiring shares off of this middle Bollinger Band. It is the load zone. Look how it's the opposite of the bearish. All right, so look how the wicks are all hitting resistance and pulling back, right? I do not like that pattern. All right, I like this pattern. All right, this pattern right here. Okay, wait, where was that? Yeah, the pattern here where oh yeah, I'm sorry, where the wicks are hitting support and they're bouncing off of support, right? So this is loading, right? And this is selling shares, selling shares, selling shares, selling shares. All right. So if you're long, you want to be loading. Okay. You got to be on the right side of the trade. And so this is a tight stop on this play. Now, if it drops below 28 and 28 turns into resistance, then it will be a risk to hold. Okay. It's going to be a good play if it breaks above that 50-day simple moving average. It's right there. It's on deck. I mean, this is at a flex point. It can't get any tighter. It's right between support and resistance. The next candle is either going to be a break above or a drop below. Tomorrow's going to be a big day. Okay, so let's look at SDS. All right, so this is pro shares, ultra short. Okay, yeah, this is the one I just showed you, the bouncing off of there. The exact same thing, you know. So it's going to be, you know, you have load. They're loading up. If it breaks above, you know, it's going to signal it's ready to head higher. It did close above the 50-day simple moving average today. That was bullish. That's 2 days in a row that SDS has closed above the 50-day simple moving average. And in our book, if the stock closes above the middle Bollinger Band and the 50-day simple moving average on the daily chart, the signal is to be long. The signal is to ride as long as support is holding. Your stop loss is that 39 level. Don't hold if it drops below 39. If it stays above 39, I mean, the signal is to ride. I mean, the chart is set up. It just has to follow through. Okay, let's look at SDOW. So this is short Dow 30. Okay, so you can short the Dow playing SDOW, and you can, you know, you could buy calls, right? I'm not recommending that. I'm just saying that it does trade options. And once again, you have loading off of the middle Bollinger Band. As long as 18 is holding, the middle Bollinger Band's at 1805, the signal is that it's in play. It has to get above that 50-day simple moving average. I think it's better to wait until it gets above, and that's the clear signal that like, okay, it's ready to go. But obviously people are loading right now. Notice the increase. This doesn't have a decreasing volume pattern. It has an increasing volume pattern. People are loading here. That it's built. The pressure's building. You still, you have this has the same thing where it has the ascending support and descending resistance. The 50-day simple moving average is the descending resistance line, and the 20-day simple moving average is the ascending support line. A break above the descending resistance line signals to go long, and a drop below the ascending support line signals to go short. Okay, let's look at TZA. This is the small cap bear 3 times. Okay, so this is shorting the Russell 2000. If the Russell 2000, the IWM, which I just showed you, is under pressure, then this should go up. Okay, so this had the nice run. It got above the middle Bollinger Band, ran up to the 200-day simple moving average, came back down, and it's holding the middle Bollinger Band and the 50-day simple moving average support level. TZA is looking a lot better than IWM right now. If you didn't know what these 2 ticker symbols were, and 2 people showed you charts and you had no idea what the ticker symbol was, and you're like, okay, do you want to be long this setup or do you want to be long this setup? Pause, drop mic. This setup, right? I mean, come on, TZA. This is a way better looking setup. I'm not saying it's going to pay off. I'm not saying that I'm right. I'm just saying that, in my opinion, that this looks like a better setup, right? Because it's above support. The candles are above support. The IWM, it's below. The candles are below resistance, right? I would rather wait till this gets above support and it looks like this to be long. This is what you want this to look like. So instead of being in this, why not just be in this? That's what I'm saying. Yeah, and then now, okay, so look at volatility now. Okay, let's look at VIX, VXX. Okay, so VIX is setting up. Okay, so I feel like this is another place to be. I feel like if the markets get crazy, if it even have a pullback, it's gonna be, this is gonna go up. It paid off last time. As long as this 200-day simple moving average and middle Bollinger Band are holding, then VXX is in play. Okay, it's taken a while to set up, but once again, if I was sitting in something, I would rather be sitting in this setting up on a bullish chart. It's in a bullish uptrend. It's above the 200-day simple moving average. All it has to do is get above EMAs 4 and 8, which are pinched right now. If you see VXX at 44 or above, just to make it easy, that's going to be very bullish. If it closes above 44 tomorrow, you know that VIX is back in play, and then you're looking at a possible run back up to 50 to test that 52 300-day simple moving average level. Okay, if you look at the 15-minute chart for VIX, check it out. Now, doesn't this look better to you than the 15-minute charts for the indexes? Like they had they're heading down. They're at the bottom of the chart, right? And look, they're heading down. They're testing the bottom. They're testing support. SPY is heading down. It's testing support. It's signaling, it wants to head lower. Okay, what does VIX look like? It's heading up. It has an uptrend. It has an uptrend. Look, higher highs. You have a low, higher high, higher high. Right? You have multiple tops now. Okay, right at this level. What is formed? An ascending, triangle. You can call this a rising wedge, ascending triangle. Ascending triangle because you have the horizontal support and ascending support. Notice how this support line, it's really wound tight right now. And so the big thing now is breaking above that horizontal resistance line, the closing price from the 20th, the high close, and then also above the red line. That's the big level to break. You can see all the candles are failing to break that. That's the 200 simple moving average at 44.18. So above 44, and it can get cooking, and then you're looking at the 300 simple moving average at 45.65 is the big level to break. Notice how each time that level gets hit, it's a top. Okay, so every time it gets hit on this run, on the bounce, it's been a top. So once you see the 300 simple moving average, which is the top moving average on this 15-minute chart, turn into support, that's when you know the bulls have really taken control and it's ready to make a run back up to the 50s. Okay, let's look at UVXY. Okay, this is really setting up as well. I mean, look at RSI. You've got it at 53 here, so it's in the bull zone. It has room to run. It's above the middle Bollinger Band right now. So it has the open red candle where it closed above the open. People are loading off of the middle Bollinger Band, so they've been loading this up. You know, it's got EMAs 4, 8, and 13 to break. And then the big level is 1782. Okay, that lime line. If you see, just to make it easy, UVXY above 18 and closes above 18 or above, that's going to be really bullish. That's going to be a signal. Yes, it's in play. Now notice you've got the you know, resistance right there above the candle, and then supports right below the candle. And so if you see it close below 1650, that's going to be your signal that it's no longer, you know, that's downside risk, and it could drop to 14. That's the thing here, is that below 1650, a close below, and the downside risk is 14. Get above 18, and the upside you know, potential is 25. And so right now, to me, it's looking like more upside potential than downside risk, with the markets being so volatile and uncertain right now. Okay, but you have to have a tight stop on this, and if it gets away from you, it's all about the close. Notice how these lower wicks got below the middle Bollinger Band, but it closed above, and so it's all about where it closes for the day, not where it hits intraday, but it's the close that counts. As long as it keeps closing above that dotted purple line, the uptrend's still intact. Now notice how it has the same 15-minute chart as VXX. You know, this is a much better looking chart than the indices. It has you know, higher lows. You know, look at the lows here. It made a low on the 16th, higher low on the 21st, higher low today. You know, or you know, you could say the low down here. It's making higher lows. You get the point. And then it also has the ascending triangle pattern, where you have the horizontal resistance with the multiple tops, and then you have ascending support, and it's coming to a flex point. And then once again, it's all about the 200 simple moving average and 18. Notice how 18 is the big level. It hit that multiple times and failed to get above. And so if you see candles forming above 18 for UVXY tomorrow, that's your signal to go long. That's your signal that, okay, it's in play, and it should run up to 19, up to the 300 simple moving average. If 18 turns into resistance and it fails to break that level, and it drops below, you know, that 1739 level, and then gets below basically the 100 simple moving average at 1684, that's like the last line of defense to keep this uptrend going bullish, then that would signal downside risk. Okay, so 1684 below is downside risk, above 18 is upside potential. And then one more to leave you with is TVIX, and yeah, this is how people trade VIX through, this is a lot of people that just trade the equity, that they like to trade TVIX, and you can see it's holding the middle Bollinger Band as well. It has an uptrend going, all right? So all these candles are above the middle Bollinger Band. It closed above the open today, just like this candle, and look how it was up the following day, the last time it had the similar candle. You know, 878, EMA 8 is the big level to break, the lime line. If you see a close above 880, you see TVIX in the 9s, that's going to be really bullish. That'll be a clear signal, okay, yeah, this is bullish. I need to ride this thing higher. It could run all the way back up to the 200-day simple moving average at 13, that upper Bollinger Band at 13 zone, if it gets back above 9. Now, if it drops below 840, that's the middle Bollinger Band. The downside risk is it tests this 100-day simple moving average at 761. It has to hold this zone here, the 760 to 840 zone. That is kind of a big zone. You know, give it some leeway with those lower wicks. It's, once again, it's all about the close. But if it does go down there and close below the 100-day simple moving average and it turns into resistance, the downside risk is it could drop down to that 50-day simple moving average at 655. And then finally, look at the 15-minute chart. Once again, you know, you have the low on the 16th, right? And notice how it's like a double bottom low. You know, you have the double bottom with the 15th and the 16th, and then you have the higher low, you know, ascending support. You can see it's a higher low. Then you have the ascending triangle, horizontal resistance, ascending support at a flex point. Once again, 200-day simple moving average, 883. Above 883, you're looking at a run up to 949, the 300-day simple moving average. It has to, all these have to break high close horizontal resistance. It has to get above the closing price here. So it's all about getting above 890, being above, you know, the 890 was the big resistance zone, closing above, getting up in the 9s, that would be bullish, right? It drops below 827, that's downside risk. All right, so yeah, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out our chat. Yeah, it's a great place to come learn. Lots of really nice people in there, and we're all just trying to help each other succeed. Okay, thank you. I'll post the link below the video.